And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. Last day of January 31st, Monday. I'm John Hoagland, as usual. Thanks for trusting me with your time. Hopefully you had a nice and restful weekend. As usual, each week, another chapter in our book of trading this year. And as always, there's lots of opportunities and challenges. We come to the end of January here, probably the worst month our equities and stocks have had in over a decade. But still, we're sitting here in not that bad a shape. You know, it's lots of changes. The market is marking some changes in interest rates into the marketplace. Overall, I think it's doing relatively well. You got to remember how resilient these markets really are. And of course, we're going to have tough times. As far as economic numbers today, nothing really all that impactful. It's 8:45, the Chicago PMI. There are a couple of talking Feds. Thinking about what's going on this week, we've got tomorrow PMI manufacturing final, ISM manufacturing index, construction spending and job opens and labor turnover survey. Though this week is really, as far as economic numbers are concerned, going to be focusing largely on employment. Wednesday, ADP employment report due out. Of course, as usual, the petroleum status report. Thursday, jobless claims, PMI, factory orders, ISM, nat gas. And then, of course, Friday, the unemployment number. Of course, when we worked on the trading floor, we always called it unenjoyment because that was always a very busy day and very few breaks and opportunities to even run to the bathroom. So we are, heading into a new week. Let's make this a good one. Stick to your processes. Put forth your hypotheses, and when your hypothesis appears to be proving correct in the marketplace, we're going to trade to that hypothesis. We're looking for a good week for everyone. As always, focus your attention on the context of the market, making sure you are a good risk manager, and remaining patient. Patience pays in this market. Risk management, can't say enough about it. It's the only thing we can really control is how much we are willing to risk. So make sure you are always protecting yourself, always wear a stop. All right. Again, last day in January, U.S. stocks are looking to open kind of mixed now as the yield curve begins to flatten out. This is something to be expected when we start raising rates. We just don't want it to invert. Market is adjusting to new expectations for interest rates this year. Of course, we're looking for a couple of rises in interest rates, anywhere from 3 to 5 from what I'm hearing. Geopolitical tensions in Ukraine and the whole world continue to simmer. Always be keeping your eyes on headline risks that are always out there, of course. Apparently, our good friend Mario Draghi is going to remain the ECB president for the foreseeable future into the elections next year. I think I'm just getting really woken up, even though I've been sitting here for a couple hours doing some research and thinking about the week that we have ahead of us, of course. Crude prices largely range-bound as OPEC is struggling to maintain stated productions. They are scheduled to have a meeting this week, so of course we'll be keeping an eye on that as well. Make sure that you continue to hit the lucky like button, share, comment, question, feedback, and heckling are, of course, always welcome. Make sure you subscribe to our YouTube channel when we do go live. VIX up 4.5%, but still lower than it was on Friday, of course, with that rally that happened late on Friday. That's going to be something we're going to be very interested in looking at this morning in the equities. The dollar index off slightly, 47.14. Just for reference, 47.44 is the 52-week high. So the dollar still remaining relatively strong. The yield on the 10-year up slightly at 1.8% off its close on Friday. We've got group coaching today and Wednesday. Here is the link. We have Foundation, Trading's Top Step Foundation. This is the last week for the current classes. I'm going to put that out here in the group, in the chat as well. This week we're going to be talking about indicators and tools. We're going to be talking tomorrow about an introduction to the market profile. I get a lot of questions about profile. Tomorrow will be a good day. If you can't make it, of course, you'll be able to see the recordings on our YouTube channel. And then winding up Wednesday and Thursday with business planning and trade planning. What does your trading plan look like? Here's the link. I didn't put it in there yet. The first link, group coaching, Monday and Wednesday at 1:30. A lot of you are probably used to being there at 1 o'clock, but because of Top Step Trader Foundation, we're starting group coaching about a half an hour later. That's gonna go back to 1 o'clock next week as we take a little bit of a break from Top Step Trading Foundation and continue to create hopefully very important and helpful content for you. Let's just say good morning to everybody. Of course, Brian, first in the room, you win the prize. Vince, good morning. It's always good to see you. Zerain, Deanna, Jeff, Deanna, no new coyote sightings. Maybe we're doing a good job of keeping them separated. Robert Kennedy, good morning. -4 in PA. I don't know if you got how much snow you got, but hopefully you're being cautious with any snow removal you're doing, Robert. Chris, good morning. Jim, Mirek, Alfred, Theo, good morning. Spencer, starting over with step 1 this week. Here we go. Just take your time, Spencer. This is a marathon, not a sprint. Every day that you can add to your account is a good day, and every day you start from zero. Christo, good morning. Andre, George, Keith, Fixit, good morning. Brody, morning. Jeff, Scott, John, Doherty, JD, hey, you're here with us. Good to see you, JD. Miguel, Ryan, Equanimous Trading, good morning. Rocking in the free world, are you, Equanimous? It's always good to see you. Sarah Hall, good to see you. Terry, good morning. Three Lions Insight. Expediter, Dean, Devante. Let's finish this month out strong. That is our hope for you and for ourselves, of course. Robert T, good morning. Frederico, Devante. Been great since looking at settlement prices every day. Excellent. Good. I'm glad that's helping you. You're welcome. Chris, good morning. Jimmy, already done for the day trading futures here from the UK. Love futures. Good. Well, we are happy that you are doing well. That's extremely important and helps us enjoy futures even more when things are going well. Charles, good morning. Jimmy N, do you consider Asian markets in your hypothesis? Because the Asian markets are pretty much the lowest volume, they're always a consideration when we look at overnight inventories when the market moves away from settlement relatively early. But as far as focusing on the markets in Asia, I don't really do that much looking into it or hypothesis. It's a global economy. We have to be aware of the economies of the world, but as far as focusing on the markets, it's too much for me. I'm focusing on the things that I'm trading. Janus, Dr. VJ, good morning. Taurus, Donnie Baracco, Galen Weston, Toadman Extro, good morning. Erickson from Brazil. Bon dia, Erickson. Bon dia. All right. Let's get things set up here. We're going to start, as usual, with the E-mini S&Ps. We'll see if we can catch the open in crude oil, although I'm not suggesting that there's going to be any great opportunities. We're kind of range-bound here, waiting for new information. But why don't we go ahead and jump in and see what we're seeing. Okay. Daily in the E-mini S&Ps. Downside momentum seems to be broken, at least for the time being. We're really in a kind of consolidation area, a wide area of consolidation, still really a volatile area of consolidation. When we're looking at the continuation chart as well as the regular trading hour chart, we see our 200 session moving average really kind of capping off activity to the upside. We're going to be looking at weekly kickoff low for capping off the lower end of the balance that we really started to establish last week. But we do have, and I do love this, the value area special situation. The value area special situation. Here's we go to the 30-minute chart here. We've been seeing a lot of these in both directions. We've seen a few spikes to the downside. Now Friday we put in a late spike to the upside. Friday's low wasn't necessarily very strong. It was only 2 TPOs, which is a degree of excess, but this market was really short down there, and boy, it really drove relatively quickly higher. A little consolidation, and then we finally squeezed out all the short time frame shorts that have been trying to see if they can catch the move down to a 30% correction, and it just doesn't happen when everybody's already in it. I'm not suggesting that it's going to happen, but we don't know what the world is going to be handing to us, and we're going to have to trade what we see to find opportunities in it. So enough of that. We have a late spike. The late spike rules. The market rushes to the upside at the end of the day and closes right at the top. Settlement, by the way, 44, 23, 25. Put that on your charts. We don't really have much of an overnight inventory. Really, we've been just kind of holding pretty close. Maybe we got a little bit short here as we get closer to the U.S. Open. The market already looking like it wants to go back and get closer to settlement. The late spike rules. If we open in the late spike, the base of the late spike becomes support. 43.83 is the base of the late spike. 43.83, just right where the market broke out the previous high of the session and drove higher very emotionally, very quickly. Not a lot of volume up there. Boy, we really put in a lot of volume right at the high before we closed. We almost moved point of control up to that level. So opening in or above the late spike is marking acceptance of higher pricing. The late spike is a change in the market and in the market state in the day time frame that doesn't have the opportunity to mark acceptance because the market is closed. When we open the following day in or above the late spike, that is a sign or a signal or whatever you want to call it that the market is accepting higher prices. So as long as we can hold above that late spike, the base of the late spike, we can be looking for opportunities for longs. This also kind of gives us an opportunity to see if we can remain rejectful. Is that a word? Rejectful? We're going to see if we can remain with no acceptance back inside of value at the same time. So this whole area down here becomes very important. And as fishermen, we're going to want to throw in our line down here if we get the opportunity. So again, if we accept the late spike, no acceptance of yesterday's value, probabilities say we go higher. Weekly kickoff high, 45.72 would be a eventual target for the market to continue to move to the upside. Let's take a look at one last thing. Open interest on Friday in the S&Ps was not tremendous. We added 1,600 in open interest, kind of proving to ourselves again that we were way too short in the body of this profile, and that to get flat for the weekend, we put in that late spike. Look for acceptance in or above that late spike. The crude oil upside performance. We're always asking ourselves, what's the direction? Obviously, the direction's higher, but how good of a job is it doing getting there is a little bit in question for me right now. The 200, the stochastic, which is one of the things we're going to be talking about today in indicators and tools, has come up with a bit of a divergence. In other words, as price continues to put in higher highs, the stochastic, this is the slow stochastic, is putting in lower highs. This is a divergence and a warning sign of potential falling of upside momentum. Anything can happen. This is such a news and supply driven market. Just looks like, Thursday, Friday, dojis, indecision this morning, inside extended trading hours from Friday. This market needs new participants for the market to continue to move higher. Friday, we lost 11,000 in open interest. Now, we've been talking about the accumulation of open interest that crude oil has been achieving, if you will, since the beginning of the year. This is probably the biggest drop off we've seen. Maybe some long liquidation, maybe some of our longs taking some profits in this move to the upside. It's still not extremely high as far as historical open interest. There's still plenty of money out there to start to bring this market to a continuation to the upside, and of course, plenty of money to take it apart, if you will. Here's the 30-minute chart. Settlement 86.82. Overnight inventory actually was a little short by the time we got down here. Overnight inventory begins right about here. So we got a little too long, we got a little too short. The thing that points out that sticks out to me is the fact that we've got an open that has occurred inside the value area. Very little change in the perception of value says we're probably going to find better trade locations as the day goes on. So be patient. We'll take a look here at the 1-minute chart. Okay, it's wow. It's a pretty big in opening range for a market that is really opening in balance. That's 27 ticks, kind of rich for my blood. We did take one little look down below it here. One tick took out any stops down below there. Now any shorts that are stuck down there are stuck up here. Just stay patient. I'm not thinking that we're going to find great opportunities off the opening range trade due to the fact that we've opened in range and value. Vince, is patience in play for the open in the S&Ps? Well, we're not in value, but we are in range. Is there the perception that the market is still range bound, but we have this opportunity to see acceptance of higher pricing? We've still got barriers above. We've got last week's high. Okay, that's really where the range bound activity cut off last week. We've got weekly kickoff low on the other side of it. But I think this is This is an opportunity, I think, relatively early, Vince. I know you're playing for the opening range trade, and I can't say either way whether I'm going to or whether it's going to work or whether I'm going to do it. I got to see what the market does here as we get closer to the open. Now, we can open in the late spike. We can come all the way back to the base of the late spike, which is, where was that again? 43.83 approximately. But, this whole range here between value high from yesterday and the base of the late spike looks like a target-rich environment. Now, can't decide, we don't know which direction it's going to go, but if we can get good trade locations against that base of that late spike, that offers another opportunity. Well, I can't say, Vince, whether I like the opening range trade here or not just yet. One thing about it, though, is if it's a 8-tick opening range or a 6-tick opening range, I'm probably going to take it just because of how cheap it is. Even if it doesn't work, the possibility that it will, with that cheap amount of risk, you got to take it. Ray, good morning. All right. Let's take a look at gold. Vince, let me know what you think about that idea I had. I was kind of, I got to wait and see what happens, see the size of the opening range. Okay. Gold. Wait, we didn't do Nasdaq yet. Let's do Nasdaq now. All right. So downside momentum off for now. We got our moving averages. We saw the divergence in slow stochastic in the S&Ps. This market has come a lot lower. It's got a lot further to go back to the upside. We added 4,000 contracts off that low on Friday. Volume largely just maintaining, but I'm liking the idea that we brought in new buyers down here on Friday in the Nasdaq, and we're going to have to see how that continues to play out. We also have the range-bound activity. Again, we're looking at last week's high and the weekly kickoff low as the extremes. And we do have a late spike. And it always turns me on when I know that we have a late spike because it's just wonderful reference for opportunity. Now, looking like the Nasdaq, here's settlement, which is 14,433. Looking like it is, going to open with a gap. The market, get this, the Nasdaq is looking stronger this morning. How can it be? Here's the late spike, base of the late spike, 14,312. Basically where it broke out the previous day's range, which is right at the value area high. This red line here, value area high. These are volume profiles. Value is in red. Outside value is in blue. Our late spike to the upside, closing right at the high of the day. And do we have any overnight inventory that we're looking at? Lower, short, long, short, mixed. But it looks like we're going to be opening with a gap. So that gives us even better reference. Opening above the late spike increases the probability of acceptance of higher pricing. There's nothing that guarantees it. Remember, anything can and will happen, especially in the world today. It seems like things are changing by the minute. So now not only are we playing spike rules, we're playing gap rules. If we can't close this gap relatively early, we're going to be looking for opportunities to trade in the direction of the gap, which would have us looking higher. Jimmy coming in with some information here. Lots of FANG stocks had analysis upgrades. We don't really see a lot of, we didn't really mention earnings today because there isn't anything all that impactful. and a lot of our FANG stocks are yet to come, and not this week. So we have to see. Where in the platform do you find profiles? Is that an indicator? Yes, it is. Here, what I'm going to do here is I'm going to take this one off, remove, and I'm going to put it back on again for you. You go to Drawing Tools, Market Profile, click and let it go. Then you go to the point on your chart. This is Nasdaq, so it starts at 8:30 in regular trading hours. So I'm gonna click on the 8:30 and let it go, and then I'm just gonna drag the cursor to the right, and then I'm gonna click again where I want the profile to end. Now we're going to be opening here in just a few minutes in the Nasdaq. So when we want the profile to continue to populate, we just bring it all the way to the end, and the profile will populate on the right hand side. When we want it when we want to close it off at the end of the trading day, we just grab it, go one bar back, and it's going to hold it there the way it holds these. All right. If you have more questions about the profiles and how to get them set up and how to make them look like this, even into the TPO profiles, how to get those set up and how to have them look like this, please come to the group coaching session. Group coaching, we can answer all those questions as to how to put these and get these all set up for you. All right. Let's now move into gold. 1786.60 is settlement. A lot of disillusioned longs last week, I would say. We lost 14,000 in open interest yesterday alone. I think the hang on one second here. I forget which one here, but that's all right. We'll just continue here. It's in a really messy area. I mean, this whole thing that we've got going on here, if it were a literary term, it would be called gobbledygook. It's not necessarily a trading industry term, but it seems to fit where the market is right now. We've broken our upside medium time frame structure by kind of coming and closing below this trend line. There's a lot of cognitive dissonance here. I'm not sensing that there's anything very clear as to direction from this point forward, so I'm going to try and stay very patient. One blessing we do have is the fact that we have an inside extended trading hour range. In other words, the range from today is inside the extended trading hours from Friday. Might give us a little bit of a lean on some of our shorter time frame levels. Take a look at the 30-minute chart. All right. So, it's left a lot of visuals above that could really kind of bode for repair. The market has opened this morning. It looks as though we may have left the opening range at the low of the session, and we've driven outside of Friday's range, which was relatively small. Now that we're kind of looking back inside value from Thursday, we've now probably checked this point of control, which is kind of what I was talking about, is, all these visuals and things that it's left unfinished above the market may bring the market back to those levels. So we've rejected Friday's range. Are we going to continue to accept Thursday's or even higher? Tough trade today. Tough trade. I'm probably going to be very patient. If I miss it, it's going to be all right. There's more opportunities coming down the pipe. All right. Yes, Ryan, you can have it populate automatically. I just stuck in doing things the old-fashioned way, I guess. Let's get through the charts here, and if we have time, we'll take a look at where that is. All right. right. So the euro, U.S. dollar kind of dancing around 52 weeks highs. There was a downside digestion that was in play yesterday and early today. Obviously, the market has caught a bid here. We lost 7,100 in open interest on Friday alone, and that's probably long liquidation. Friday, the market really kind of hung near the lows. We had the breakout to the downside the day before. Volume was not great on Friday. The open interest we lost, indicating there's a lot of selling that occurred there that is taking buying power, that is taking selling power, I should say, away from the market. It doesn't surprise me that we found a little bit of a bid here this morning. I was going to be saying, watch the extremes of the early balance that we had here in the euro, and that open interest again indicates a liquidation on Friday. Take a look here. So here's another market that's got lots of visuals with which to look for to come back and recheck if the market kind of begins to recover. Now, like gold, we found a bid on the open. We are rejecting this 2-day range or balance down here. If I'm going to be, I don't want to fight any moves to the upside through here. This is a lot of space with which to kind of go back and recheck or repair, if you will. I don't want to fight this move. I'm going to be probably looking for opportunities to buy pullback until there's an acceptance, a reacceptance in yesterday's range. Yesterday I mean Friday. Always happens to me on Mondays. All right. And a 10-year. Just kind of pushed us from one long-term area of balance to a new area of medium time frame balancing to cause this. Its price is currently central inside weekly kickoff range, which is weekly kickoff levels are levels that I believe we're going to have to force, or that the longer time frame traders are going to be forced to adjust inventory as price changes. And we're pretty far away from both extremes of that. I'm going to try and stay really patient today. Here's the 30-minute. So we had a little bit of a sell-off here into the open, recovering back into range and value. Overnight inventory, maybe we got a little too short right before the open, but I think we've reconciled that. I'm not looking at this market as a market that I'm in a hurry to try and get something done in. We're range bound. We're inside extended trading hour range. We're inside regular trading hour range and right in the middle of value. Again, better trade locations are likely to come as the day goes on when we do have this situation. And net gas. All right. Volume and open interest increased on upside momentum on Friday. Rollovers now over. So now we're going to be able to trust with greater ease and expectancy the volume and open interest information. We've had a move towards the weekly kickoff high, which is largely based around this November 26th high, swing high here. Is the market going to continue? I see somebody asking if this is head fake or is this put in or what's going on. We don't really know, but this was an area that a whole lot of folks were thinking we were going to be heading to the upside, and the opposite happened. We had winter coming in. We had Europe going to be struggling with having enough nat gas or heating oil, whatever it is that heat their homes, and the opposite happened. It kind of happens sometimes that way. So, really, the question is, Last week's high somewhat pivotal. The previous swing high, weekly kickoff high, obviously is going to be something we're going to be focusing on if the market gives us that opportunity. And then, we've got, let's see here. ZN. Gas. So we have the opportunity with the market opening outside of range and value from Friday. We are perhaps beginning to show acceptance of price inside value from Friday. Gap open, return to value, accept. I mean, if the market accepts back inside value from Friday, but at some point during the session today, it could move back to the low of value from Friday. When we reaccept value, we tend to span value. So there's a few things that I want to watch and see how things play out on the market recap today. So we're going to think about this and see what we come up with now here. Give me a sec. Okay. Let's see how the spike play out in equities. Spike in equities. Number 2, the value area special situation, VASS in nat gas. And then what's another one that we were kind of looking at here? I think gold would be an interesting one because I wasn't expecting to see a move like that so early in the morning. So whatever gold does, we're going to double check that. So on the recap today, 3 o'clock, I'm going to be doing it again. Dan's been busy lately, so I know we all miss him. I'll send him your love, and so we're going to see how those things play out. Don't forget group coaching. Don't forget foundation today, and don't forget to take your deep breath. Humble, grateful, and creative. Set your hypotheses. When one hypothesis rings true, trade to that hypothesis and succeed. Have a great trading day. I'm going to run down to the proverbial trading pit here in a couple of minutes. Get out there and profit. Trade well today, and we'll see you throughout the day. Have a good one.